today we're tackling one of the most pressing questions for home buyers, sellers, and investors. Will interest rates drop after the 2024 election? Hey everyone, welcome back to the channel. If you're new here, I'm Whitney Michael, your local real estate expert. As we know, interest rates play a huge role in the real estate market, impacting everything from home affordability to investment decisions. And with the 2024 election just around the corner, many are wondering if we'll see a change in rates based on the outcome. So why do elections even matter for interest rates? Well, historically, elections create uncertainty in the market. This uncertainty can cause both the stock market and mortgage rates to fluctuate. But here's the key point. The Federal Reserve, not the president, directly controls interest rates. So while a new administration or policy changes can influence the economy, it's really the Fed's job to raise or lower rates depending on the economic outlook. What does the Fed look at when deciding interest rates? It all comes down to inflation, employment numbers, and overall economic growth. Right now, the Fed has been raising rates to curb inflation, but what happens after the election? Post-election, if the economy is still facing high inflation, it's possible rates could remain high or even rise further, regardless of who wins. On the other hand, if inflation is under control and the economy slows down, the Fed could lower rates to stimulate growth. Now let's address the big question. Will rates drop after the election? This is something that's on a lot of people's minds, especially those considering big real estate moves. The reality is predicting interest rates can be tricky because so many factors come into play. To better understand if interest rates will drop, we need to take a look at a few key factors. First off, the Federal Reserve's decisions are largely influenced by inflation. The Fed has been raising rates aggressively since 2022 to combat high inflation. If inflation continues to decline in 2024, there's a chance the Fed might start to lower rates gradually, perhaps later in the year. However, even if inflation drops, the Fed will be cautious. They don't want to lower rates too quickly and risk sparking more inflation. So it's likely any reduction in interest rates would happen slowly and over time. And keep in mind, we probably won't see drastic rate cuts like we did during the pandemic when rates were historically low. But what role does the election itself play? While the election results can shift market sentiment, they don't directly impact the Fed's rate decisions. Even if a new president or administration comes in with plans for economic reform, they can't instantly change interest rates. The Fed remains an independent body that reacts to the economy as a whole, not to political changes. That being said, a new administration might bring new policies relating to housing affordability, taxation, or even incentives for home buyers. These policies could have an indirect impact on the market and over time influence how rates move. For example, if new policies are implemented that boost consumer confidence or lower inflation, we could see rates begin to trend downward. On the other hand, if inflation continues to be a challenge or if the economy enters a recession, the Fed could keep rates high to stabilize things. It's a delicate balance. So while the election results may influence some economic factors, it's the Fed's approach to the broader economy that will dictate interest rates. All right, so now that we've covered whether rates might drop after the election, let's talk about what you should do right now. Should you wait it out or take action now? Well, that depends on your personal goals and financial situation, but let's break it down. If you're a buyer, waiting for rates to drop might seem tempting, but here's the thing, waiting is a gamble. While we could see rates lower in late 2024, we also might not see significant drops until 2025 or later, depending on inflation and the Fed strategy. And even if rates drop, housing prices could continue to rise, which could offset any savings you get from a lower rate. So instead of waiting and hoping for a better rate, here's what you can do now. First, Shop around. Different lenders offer different rates, and sometimes a fraction of a percent can save you thousands over the life of your loan. Also consider looking at adjustable rate mortgages, also known as ARMs. With an ARM, you could lock in a lower rate for the first few years, and by the time the rate adjusts, we might be in a lower environment. Of course, ARMs come with risk, so make sure you understand the terms before committing. Another option is to ask about rate buydowns. This is where you pay an upfront fee to lower your mortgage rate. If you have the cash on hand, it could make sense to lower your monthly payments now rather than waiting for rates to fall naturally. Just remember, you have to calculate whether buying down the rate is worth the upfront cost for your long-term financial picture. Now, if you're a seller, don't assume that higher rates means no one's buying. Yes, higher rates do affect affordability, but demand is still there, especially in desirable markets. What's important for sellers in this environment is pricing your home right. With buyers facing higher mortgage payments, they're going to be more selective. Overpricing your home could mean it sits on the market longer. Staging is another key factor. In a market where buyers are more cautious, make your home stand out with top-notch staging and curb appeal. Consider small updates like fresh paint or landscaping to make your home more attractive. And remember, while rates are higher now, that might push some buyers to lock in a deal before rates go even higher. So there's still plenty of opportunity to sell. For investors, this environment can actually present some unique opportunities. Rental demand is up as many people are delaying buying due to high rates, which means investing in rental properties could offer a solid return right now. Plus, if you're holding on to cash, buying at slightly higher rates now and refinancing later when rates drop could be a long-term win. Ultimately, whether you're buying, selling, or investing, the key is to focus on what you can control and make informed decisions. Don't wait on the sidelines for a perfect market because no one can predict when that will happen. Instead, focus on your long-term goals, stay flexible, and work with a knowledgeable real estate agent who understands how to navigate the current landscape. In the end, predicting interest rates is like predicting the weather. There are trends and signals, but it's never 100% certain. The 2024 election will definitely have an impact on the broader economy, but whether rates will drop depends more on inflation and the Fed's response. Stay informed, stay flexible, and as always, if you have any real estate questions or need help navigating this market, feel free to reach out to me. As always, I hope you found this video valuable. Please do not forget to like, subscribe, and hit that notification bell so you don't miss out on any future updates about the real estate market. Thanks for watching. See you next time. Peace.